November the 10th, 2017, 5 a.m. EST. Last updated November 10, 2017, 5 a.m. EST. Top of the morning, it's me, reporter Jeff Zochodny, at Jeff Zochodny. Decision time is nigh for TransCanada on Keystone. The new head of Manulife isn't counting on another interest rate hike, and bankrupt oil companies have now dumped 9 figures worth of environmental liabilities on Alberta. Claudia Cattaneo reports that the head of TransCanada Corp. said Thursday that the company proceed with a final investment decision on the long-delayed Keystone 40 pipeline after the final route review by regulators in Nebraska later this month and following the evaluation of shipping commitments. Bottom line, while he didn't reveal an exact date, TransCanada CEO Russ Girling said demand for oil transportation capacity remains high and shippers want to see the project constructed as soon as possible. The Nebraska Public Service Commission held hearings into Keystone 40's pipeline route in August and is due to hand down a decision by November 23. While recent interest rate hikes in North America are perceived as positive for the life insurance sector, they aren't prompting a change in strategy at Canada's largest insurer, New Manulife Financial include. Chief Exec Roy Gori said in an interview with FP reporter Barbara Schechter. Bottom line, there's still a lot of uncertainty in terms of global growth and inflation and, as a result, interest rates are still significantly low, certainly lower than they have been historically, said Gori, who took over as CEO from Don Guloyan in October. And we're working on the assumption that that will continue. Jeffrey Morgan writes that bankrupt oil companies have now handed Alberta's Orphan Well Association more than $100 million in cleanup costs after a controversial court decision last year made it easier for those firms to dump their liabilities. Bottom line, Alberta appealed the decision all the way to the Supreme Court out of concern it would lead to more companies stripping off bad assets and handing the bill to the OWA and, potentially, on to taxpayers. The Supreme Court announced Thursday it would hear the appeal. Uranium investors finally have cause for positivity, reports Jonathan Ratner, as Cameco Corp. announced facility closures on Thursday that will remove a large amount of the commodity from the market next year. Bottom line, the news sent shares of Saskatchewan-based Cameco higher, as the production cut is expected to be beneficial to a global uranium market that is widely forecast to be oversupplied by approximately 20 million pounds in 2018. Citing 6 sources, Bloomberg says wealthy Saudis are moving assets out of the region to avoid the risk of getting caught up in what authorities call a crackdown on corruption. Bottom line, the arrests have prompted investors from within the region to sell, pushing benchmark stock indexes lower. The sell-off across Gulf Cooperation Council countries has cost stocks $17.60 billion as of Wednesday, dragging the collective market capitalization for bourses in the region to $900 billion, according to data compiled by Bloomberg. Zochodny at postmedia.com.